folks. Once again, testing. Apologize for the. And here we are. I can see myself. Great. Okay. So, welcome to the show this morning. You're watching the Short Vol Show live on YouTube. No, we're not on YouTube anymore. We are on Twitch. And coming out of the weekend here, we have UVXY slightly up. We have weekend effect going on right now. And weekend effect is that thing where the VIX appears to kind of move higher than you would kind of think it would on a Monday after the weekend. And thus, we can see the VIX is up over a point. If you look right behind my head there, you can see the VIX is up over a point. And so, let's see if I can get out of the way here for a second. Just kind of getting my bearings with this whole little setup here. Yeah, so VIX up 123 right now, and AIMT. Thank you for the nice person who wrote me a comment saying that they bought AIMT based on my recommendation. However, I never did actually recommend AIMT. What I did say was that I was buying some calendars, which made me make money to the downside, and so to hedge against that, I was leaning long into this event that happened Friday. And the event that happened Friday, it appears to be turning into really a non-event right now. I mean, we've really moved kind of sideways since then, it looks like. Really not the huge up move that people were calling for and expecting. In fact, AIMT now trading below 24, and really kind of non-event like after that big meeting. Now, remember, the stock was closed all day Friday. Let's see if we can see on here exactly when it reopened, because I'm not even sure myself exactly when it reopened. So it looks like it might have opened in the night session a little bit Friday. It shows 7:30. It trading up to 29 here, and then you can see on the open today a little bit lower. So really not the huge rip up, but then again, not the huge rip down either. I mean, this stuff was so bid up. So winners, anybody who sold a bunch of stuff in the front month, which looked really scary. I mean, you know, those people were buying the 1230 strangle, paying $1.40. Well, that 1230 strangle is now worthless. Let's take a quick look at options markets in AIMT right now. And you can see the front month collapsed. Second month collapsed. So, for example, this the 15 calendar that I was trading, look, it's basically worthless here with the OC15s. No bid at all. So that was going to go out worthless. Now the 20 calendar that we were doing for 20 cents, that would have worked here. 20 puts now, 40 cent bid at 60 in October. But, you know, most of the stuff just collapsed. So none of these put calendars would have really worked here at the moment. You can see them just, once again, have everything's just sort of collapsed here. And the OC puts worthless. So that stuff would not have worked. What would have worked is leaning long against us, I guess, but really a big non-event here in AIMT as we look at this. Let me see if I can just reach out to StockTwits and bring more people in here just as we get started. I know I got started slightly late, and thus there's not a whole lot of people in, but you know, this is the first moment of being on Twitch, so it's a little shaky from my end. There's a whole bunch of new controls here for me to learn about, and so I'm just getting started here. I apologize for the late start, but let's post here and see if we can get some more people. And thank you for coming on and checking us out this morning. Yeah, it's a brave new world with Twitch. Turns out you need to know something about using a computer to stream on Twitch. Who would have thunk? And there's all kinds of really cool stuff here to do, but you know, what's the point of doing it if all that many people aren't watching us? So with the E-minis down 9.5, the VIX up a 0.24. It seems a little extreme, but once again, this is that weekend effect thing happening. And the other thing that's happening here is that as we get very close to expiration, you're going to see the front month futures are going to hug the VIX here. You can see they're only 1 point away. That's a little extreme. You wouldn't see them that close until right on expiration usually, but I assume that these futures really just don't know what to do. This is the lowest we've seen in the VIX in a while, and thus it really is kind of doesn't really know what to do with itself right now. As we look, I'm just going to pull up the ProShares website here and look at daily holdings here. Now we can see that we have basically 3 days till expiration, and all of these ETPs are basically made up almost entirely of October futures at this point. You can see 4,000 September futures versus 35,000 October futures, and so the front month futures are not weighing a whole lot into the equation here as far as the VIX is concerned. You know, somebody was saying on one of my videos, let's take a look at UVXY here. Someone was saying on one of the videos that I was sort of I can't say it today. I was over accounting for contango as far as what's going on here with our calculations. And that could well be true. I've done this before, but let's do this again and take a look at, let's take a look quickly at VIX Central, and let's talk about the term structure once again, because everything ties back into the term structure when we're dealing with the VIX. Okay, so let me get my head out of the way here. And let's see. So and well, that hasn't quite worked yet. But anyways, behind me is the term structure, and I'm having issues already. All right, so that's a little bit better. So if I pull up my little drawing tool here, and we isolate a little bit of this term structure, okay, what we're dealing with as far as potential and as far as edge is, we just have to remember all the time that what's going on is that the this area between the futures and spot is our potential to make money. And so we're going to make this as wide as possible. And so these futures are always falling towards spot all the time. And thus, the more room they have to fall towards spot is the more sort of potential edge to the downside here. So the wider this number is between spot and the futures, the more room there is for this stuff to fall. Now, every day when things rebalance, essentially what's happening is that a small fraction of these futures that show down here, the front month SEP ones that show 1508 right now, are being replaced with the AUK ones. So what that's doing is it's giving this whole setup more room to fall. The amount that it has to fall towards spot increases as we rebalance, and that rebalancing and that increasing of that width gives us more potential to make money and more potential for this to fall. So that is a big factor in things. And maybe I don't describe it correctly all the time, but essentially this replacing of the front month future with the second month future is giving us more room for this stuff to fall. Now, the distance between the futures and spot, and you can see the front month future at this moment, there's almost no distance between that future and spot. Now, that's not a huge factor right now because, as I just said a couple minutes ago, the VIX ETPs, those including VXX, UVXY, SVXY, TVIX, are mostly based of the second month on the second month future. If you were to take this, if we were to look across this chart between September and October, and we were to take this this space here between September and October, and we were to divide this into 30 days, that would if that we were to divide this into 30 days, that would represent, you know, the month of for us and where we stand with the futures. And right now we are almost to here in that month because we're just about to expiration. So that means that on this chart right now, we're not you would think, look at this chart, we were looking from right here and this was the beginning of the chart, but actually we are here on the chart right now. All this stuff before has already passed, and thus this is the composition of UVXY or TVIX is right here. That's where we are on the chart right now. And so our potential is pretty big. Even though we're looking, if you look at this chart, you see all the front month futures right next to spot. Well, maybe that means there's no potential. But the thing is that's not where we are on the chart. We're right here right now on the chart. And yeah, there's a distance between these two is big, and that is represented by this 13%. Now, a lot of people will tell you, oh, well, it's not really 13%. It's mostly just this relationship between OCC and November. But I would kind of dispute that. I would say that the fact that this front month future is very low, even though it doesn't represent much of the calculation right now, it still represents some of the calculation, and it still comes into play in the pricing of the underlying index, which this is based upon. So we are right here on the chart right now, and we have this potential for this to fall. If we look at the actual numbers here, once again, we can see the VIX is 1491, and the second month future is 1712. So that's over 2 points. That's like 221, the distance between the spot and the soon-to-be front month future. So if we could say that there's 221 between spot and the OCC future, we are right before being composed of entirely the OCC future right now. So if there's 221 out to the OCC future, we could say maybe there's $2 right now between the actual value of UVXY and spot. So you see where I'm getting that from? If we go back to our little chart and we say once again that we are kind of here on the chart right before the OCC future, because every day this moves, you know, out a little increment. You know, basically, if there's 30 days in the expiration cycle, it moves 1/30th closer to this to the M2 future, which is October right now. So if there is 220 between the M2 future and spot, and we're just 2 days away from that, then there's probably about $2 in edge right now for this to fall towards spot. Now, if the VIX stays right here, that's what's going to happen. This is slowly going to fall towards the VIX. However, if the VIX is to pop, let's say, a little bit and move towards the future, then you know, there's going to be less space there, but ultimately what the VIX spot does not determine the price of the ETPs. What determines the price is the actual future. So it's very conceivable that if we get a little pop in the VIX, this future doesn't go up all that much. If we have a little move up in the VIX, let's say the VIX pops 50 cents, this future, because it's still so far away, if the VIX pops 50 cents and this future doesn't move, there's still $1.50 or let's say $1.70 between this future and spot, and that's perfectly reasonable. So you could see spot pop 50 cents and this future only move up like 10 cents or something like that, because there's so much. This is like a big shock absorber for these ETPs, and what that amounts to is that these are with so much room between spot and the M2 future here, which is most of the calculation. There is a ton of room to absorb any sort of pop in the VIX, and what the end result is going to be is this is going to underperform to the upside a lot. So you could see the VIX pop a little bit and UVXY hardly go up. And if we look at actually today what happened with the VIX up, now it's up a 0.14, and we see UVXY up 45 cents. Now this is supposed to be 1.5 times leverage ETP. So I'm sure you're going to see people in the chat today saying manipulation, the market makers are manipulating, this is a scam, because what they're going to do is they're going to look in their mind, they're going to say, well, the VIX is up 116, this should be up, this is 1.5 times leverage, so this should be up like $1.60 or something, UVXY. Well, why is it not up $1.60? Because of what I just explained to you. The fact that there's so much room between spot and the M2 future, it creates a shock absorber where there's just not a lot of pressure on that future to move up, because even with the VIX up a point, right now with the VIX up a point, that front month future is up 50 cents. So it's moved up a little bit, but not very much. And the second month future, which is what we've been talking about, which is mostly what UVXY and these things are made of, is only up 18 cents with the VIX up 112. So that is exactly what we've been talking about here. And the reason that's happening once again is there was so much room between VIX and this future to begin with that the VIX moving up a little bit just kind of brings things a little bit back into line. So this future doesn't feel the need to move very much up at all. Now, the flip side of that is several days of the market rallying, and we had the VIX down, down, down. These futures didn't move down all that much during that period. So they definitely, if the VIX stays down here, so to speak, below 15, let's say, these futures have room to fall over time. And if the VIX just stays in this area, these futures are going to fall towards it. So the sum total of this whole sort of analysis here is that there is a lot more room for this to fall. And now that we are in a normalized contango state for the term structure, we've got room here to the downside for this to take out the all-time lows quite easily. There's a lot of potential to the downside here locked into this whole calculation. And even if, and it sort of doesn't look that way in a sense because the front month future is so close to spot, but the front month future is always going to be very close to spot when we've got 3 days to go till expiration. We have a couple things going on here, and one of them is that we always need to be cognizant of where we are in the expiration cycle when it comes to the VIX. And right now we are right near expiration. Now, I believe that there is a lot more potential to the downside, and if I just go back once again to the term structure here, and we look at the relationship now between the M2 and the M3, we will look to this relationship between October and November. Right now it's showing 3.6 cent contango. We will look to this relationship to extend rather quickly as soon as expiration occurs and the roll starts being between these two futures. We look for this number, this contango number, 3.6%, to rapidly expand as this future, once it becomes the front month, starts to become more responsive to spot and starts to get starts to feel the pull, like almost like a gravitational pull towards spot, becomes stronger and stronger as that future becomes the front month and starts to enter that expiration cycle. The expiration cycle might be 28 days, it might be 30 days, depending on the month. But either way, the closer this future gets to expiring, the more responsive it's going to become itself to spot. And thus, we don't need the VIX to like move way lower for UVXY to go down. We just need the VIX to stay where it is, and this future is going to get pulled downward towards spot. And that whole time this future is getting pulled downward, however, we're moving farther on down the line. So we pull up our little handy dandy drawing board here, and all of a sudden, by this Friday, we're going to find ourselves here on the chart, basically, where we're above this October future, and we're heading towards this November. November's after October, right? We're heading towards November, and we're slowly replacing, once again, these October futures with the November ones. And as the average future price moves away from spot, we're adding potential to make money to the downside once again. And, this is where the money comes from, is these futures just falling. It's not from some rebalancing magic money calculation, buying this and selling that. It's from these futures falling. And it's also from the what we call the beta drift, which happens with the leveraged ETP. So when we have a leveraged ETP, as it rebalances to keep that constant 1.5 times formula, you're going to get what we call beta drift. So, for example, at the end of the day, if UVXY is going up a bunch, they need to buy a few more futures to keep it so that if it goes up, it'll be 1.5 times leverage. And so they end up buying futures. Let's say, just for an example, let's say they start buying futures when futures are 17.16, they buy a bunch. Then the next day, UVXY is down, and these futures are 16.90. Now they have to sell some extras at 16.90 to rebalance to keep that constant leverage, and they ended up paying 17.16 and selling those futures back out at 16.90, and this ends up decaying due to that rebalancing of with the leverage component. And if you look at Michael Listman has some tweets where he shows what each of these components is doing as far as how they're contributing to the price decay of UVXY. And you can see that beta drift particular component is very, very significant. So let's see if we can pull up this tweet by the man. And, this whole thing with Twitch, you have to do a certain amount of hours and all this stuff to, I have to build up my, my kind of cred on there. Okay, so here we go. Let me just make sure you can see this here. So this is from September 13th. UVXY, total decay due to contango, $1.50. Total decay due to beta slippage, $2.64. Decay due to quote-unquote error between spot and UVXY, $5. So what I'm kind of describing there is this kind of like error between spot and UVXY, and I'm not sure that is the technical term for it, but it still is our way of trying to figure out how to quantify these various items here. And I'm wondering what time period this is that he's sampled here. I'm wondering if it's this year so far or what. But these three factors are contributing to the decay here. But to trade this stuff, you don't actually necessarily need to know why the stuff is going down. You just need to know that it is, and to jump on to that decay train. Okay, so there we go. I clearly need to work on my streaming skills here. It's a new platform, and I don't have it all down yet at all. So I need to practice this, which I will do. And I appreciate you watching. I apologize that this is like slightly bungled the first day, but everybody has to have their first day, right? And I'm having mine here. And there we go. Let's take a look at the position in UVXY here and see what we've got going on. E-mini's only down 475 right now. I did the actual position we have, our sample position in UVXY right now is we are long, once again, that NOV 2824 put vertical. And ACB currently down 20 cents. It was down more before. That's nice that that's back up. If I switch here to, we can see, we're long 22 of the 2824 put verticals, and we're short this 2116 put vertical twice. I was kind of messing around with that. What I want to do now is I want to trade this condor twice so that we can take these verticals off the sheets here and just kind of simplify our position back down to just being long that one put spread and kind of get rid of this other part here. So let's see. It's very hard to tell just like from a cursory glance what this stuff is worth here. But the markets are pretty tight for the moment here. And this is just a 2-lot here, so I don't feel too uncomfortable trading this at the midpoint as these markets are pretty tight. Let's see if they will let us undertake this particular trade. So let's queue it up one more time. Sell the 28 put, buy the 24, buy the 21, sell the 16. So this is this little condor. And it's showing at 117. A second ago, showing at 114. Let's see if it lets us trade it right there. There we go. It just kind of takes that off of our sheets. And now we're back to just long this 20 times. Now, it's a $4 spread. We're long it 20 times. So it can be worth up to $8,000 if UVXY is below 24 in 60 days. I think we have a good chance for that. We're $1.25 out of the money right now on that. But we do have 60 days to go, and we do have all these factors in play that I've discussed with you currently. So we'll see what happens on expiration. Expiration is always a exciting point. Hi, chat. I guess I have to do a couple things to establish myself on Twitch. So let's look up and see exactly what it says, what we have to do to establish ourselves on Twitch. So if I go to Twitch, and then I've got these like guidelines I have to get to. So let's see. Stream summary. So I have 2 viewers right now. Thank you much, viewers. Thanks for my 1 follower. You're my first follower, Markin. That's awesome. Thanks very much. And I want to see what I need to do. Like, I think you need to like stream for like 24 hours. And there's one thing I read where you need to get like you need 50 people in the stream at the same time to get like to the next level or something like that. I don't know. It's going to take me a little while to get 50 people in the stream at one time, I think. But I do want to get there, and we can get there together. I'm certainly not looking to like make money off people here. What I want to do is make people money. That's my biggest goal. Let me get this off the screen here so you don't see that mirror. Yeah, my biggest goal is to obviously make people money and to educate people. That's what I really enjoy doing. And well, we'll have to see where our next spot is. I think I need like 5 people in chat at once talking. So maybe we can get that in the next couple of days. I'm excited just to have anyone watching for the first moment as we produce our, I guess this is our second video. And it looks like the market can go positive today, and it looks like UVXY could go and make once again new lows. Our position right now, we're short 250 deltas. So what that means is that theoretically each dollar that UVXY goes down, we make $250. The reason I say theoretical is that sometimes the day before we got good or bad marks or something like that, but in the end it's going to even out to be pretty accurate that each dollar this goes down, we make $250. If we look at our Greeks, we can see our gamma and theta. And when our whole position is based on a vertical spread, I don't look at things in the terms of my Greeks as much as just looking at terms of the spread and risk reward. And by risk reward, I mean, how much did I pay for the spread? How much could I potentially make on it? In this case, we paid $2.31 for this spread, and it's potentially worth $4. So 231 times 20 would be 40, right? 23 times 20 would be 46, right? So we paid $4,600 for a spread that could potentially be worth $8,000. If UVXY is over 28 on November expiration and we don't do anything, we just leave the spread on, that $4,600 will be gone. If UVXY is 24 or below on expiration and we do nothing from here, that $4,600 turns into $8,000. So that's kind of where we stand. All that theta and whatnot in the meantime is just kind of telling what the position is decaying based on exactly where we are right now. But in the end, the calculation of risk reward for me overwhelms those Greeks. For example, just to give you an idea of like theta, if this were to go to 23 and just sit there, if this were to go to 23 today and just sit there until November expiration, we know at November expiration, if this is 23, this position will be worth $8,000. However, if UVXY were to go to 23 today, it wouldn't show us making $8,000 because there's still plenty of chance that this could go higher before expiration. However, if we sat at 23 each day, it would show us collecting a little more money until we got to expiration and the full $8,000 was realized. The theta number in your Greeks at the bottom of the screen is going to give you an idea of how much that money is flowing in or flowing out on a day-to-day basis currently. So right now with us around 25, the decay in just because of the skew and everything, there's a skew to the upside in UVXY. So just because of the skew and everything else, the position's actually costing us $8 a day, and we'd actually lose $8 a day. And if you actually did the break-even calculations here, so break-even calculation, so currently, if we expire right now, what is the spread worth? Well, how far are we from the 28 strike? If UVXY was 25 right now, the spread would be worth $3. Since it's 25.15, the spread is worth $2.85 if we expired right here. Currently on the screen, if we look at the midpoint in the spread here, I'm just going to queue it up. We have the spread worth 275. So over the next month, or the next 2 months, if we expired right here, we would just gain 10 cents. So it shows us losing $8 in theta. However, as we move through the month, that would slowly turn to us gaining theta, and we would gain another 10 cents over that long period of time. If it's easier for you, you can look at your position on a visually on this risk profile chart. And the way I got there was I went to the Analyze tab and I clicked on risk profile. And this basically shows you here that we make money as this moves lower. And I wonder why it's centered on 80. That's very strange. Yeah, it's doing something wacky right there, and I'm not quite sure what it is, but I need to. All right, so here we go. So this is showing us the blue line is November expiration, and the purple line is September expiration. And we're showing November expiration, as we said before, you're going to make the maximum at or below 24. And it's showing that amount to be 3,197. So essentially, our position has 3,100 more to make if we just hang out. And I'm not sure why the numbers aren't coming perfectly for that. But anyways, all right. So I'm sorry, I don't mean to bore you too much. Hello, everybody in chat. Thanks for watching the first ever episode of VIX Crush's Short Vol Show live. And welcome to the chat. It's great to have you here. We have a day where the market seems to be recovering, and we might actually go positive on the day. The VIX is up 92 cents, mostly, in my opinion, due to that thing called weekend effect, which is when the VIX formula is based on I believe it's a 5-day formula, and it's based on trading days, but there's also the weekend. And so what it ends up happening is it discounts Friday. So the VIX is slightly lower on Friday than it quote unquote should be. And then on Monday, it's slightly higher than it quote unquote should be. And that happens pretty much every week. We are going to expiration coming up Wednesday morning. So you can see that spot is hugging. The spot and the front month future are very close to each other. Usually they hug each other coming into expiration, but they're actually really, really close this time, closer than usual even. Anyways, I haven't had anybody say anything in chat yet. I welcome one of my 6 viewers to be the first person to actually say anything in chat on Twitch for us, because I've actually never had anyone say anything in chat, because this is our inaugural event here. But yeah, looking good for the short position. It looks like we might break 25 here, which is a beautiful thing. Hanging out with this position. Now, what I was thinking about doing with the position as we move lower here, because there's some point where it's going to be kind of foolhardy to stay short the VIX, right? I mean, yeah, you could stay short it all the time because it's traditionally, it's always going to go lower. However, there's going to be some point where, you'd love to be short this when UVXY is 40, but if it takes out the all-time lows and it's like 22 or something, we might want to ease off the short delta a little bit. You follow me there? And one way of doing that I was thinking about would be to change our position to a calendar spread. That way we are still collecting decay every day, or I shouldn't say still, because we aren't collecting decay every day right now, but we would be collecting decay every day, and yet we don't have that short delta that can kind of blow up in our face if this pops. Because we know someday this is going to pop. We don't know which day that's going to be. And if we look at the run we've had in UVXY, we've had quite the run in the last, what shall we say, half a month. I mean, we came from 34 down to 25 here. And, you know, we got a little pop today, but this run will not continue forever. So, I'm thinking I want to pare down the delta at some point here. I've just been hanging with this stuff for now, and it's been working. But at some point, we want to pare down the delta. And my idea to do that would be to change to some sort of time spread or calendar spread. And we could look at something here. For example, maybe the Jan, pick either at the money or we could pick a slightly out of the money. So maybe the Jan 23, we buy the Jan 23 put. Or I'm sorry, we buy the D's 23 put and we sell maybe the SEP 23 put. And so if we were to do this 15 times, what I'm doing is I'm queuing it up in my Thinkorswim, and then I'm right-clicking the mouse and I'm selecting Analyze Trade. And this shows all the trades I have. See if I can get my, all right, so this shows all the trades I have on plus the trade we're considering. So I'm going to unclick the actual position so we can isolate this trade. So if we were to put this trade on 15 times, if I right click once again over the trade and select create duplicate order, continue and send, it's not actually going to send the trade, it's going to confirm it first. But this will show us, if we were to put this trade on 15 times, it would cost us $4,600 to initiate the trade. And then it would give us a delta of short 90, and we'd be collecting like $50 a day. So then if this moves up 10%, we're going to lose some money if it moves up 10%. We're going to lose $445. However, if we compare that to the position we have on now, let's click over the position we have on now, we would lose half of what we would lose with the position we have on now. That makes sense because the delta now is short 232, and the delta there is was short 90, right? So a little less than half. The other thing that's noticeable here is, of course, the theta, where we would collect money every day. So if this just hangs out, then we collect a little money every day. Now, if it continues to roll lower, which is entirely possible as well, down 10%, we're going to lose $80. However, notice the theta is increasing as we move down there. And that $50.57 a day we're collecting is going to go a ways towards making up for the loss from that position. So when we have this calendar spread on it, it's like being short straddles in that we collect money every day, and that's going to help offset anything we lose from directional moves in UVXY. So I'm considering kind of switching the position a little bit towards this sort of thing. And another way of looking at this is that we're buying the 23 puts in December, and we're just selling some of the puts in September to kind of offset the cost of these puts or lower our cost basis. So we're still, we still have a downside bias here, but we don't have as much of a downside bias as we did when UVXY was in the middle of a huge spike, which kind of makes sense and plays into the narrative which is going on here. So that's something to consider. The other thing to consider, of course, is to go back to a bullseye type situation. Now, several viewers have pointed out that with the down move in UVXY lately, the premiums are not as high as they were before for like a bullseye type situation. So instead of collecting like $1.80 to sell the at the money call, now we'd only be collecting like $1. So for each $3,000 or $4,000 that you have to play with, you collect just over $100 per week. And so that's not a ton of money. You do have risk on with this, of course. Your risk is, you should consider your risk to be that you're short 100 shares of UVXY for each call you sell. I know that's not the risk to the downside. You don't make what you would for being short 100 shares if this moves way down. However, your risk to the upside is that you get assigned on these calls, and your short the equivalent of 100 shares. There's a little less premium in this, but I still think this is a very valid trade, and it is can be a lucrative trade. It's great risk reward in my opinion, because once again you're using several things in your favor. A, you have the fastest decaying option on the board, the front week at the money calls. B, you've got all those other aspects we've talked about, the distance between the futures and spot, contango, and beta drift. And you've basically combined all of those things to pick an option that's got a great, has great potential to make money and better risk reward than many other things in the trading world. So that is still a viable thing, even though you're not collecting a ton of money. Mike in West Barnstable. Is that West Barnstable in England or in the United States? Interesting, because I'm living near Barnstable in the United States, and maybe I'm not even pronouncing it right if it's in England. Anyway, thanks for your first comment, Mike, and thanks for following. I like the idea of maybe switching to a bullseye, because once again, a bullseye situation is going to lower our delta. I get a little nervous having a comparatively big short delta once we get closer and closer to the all-time lows here, because it seems like there becomes, as we move closer and closer to the all-time lows, now the all-time low being 23 and change, it seems like there's more room for us to pop to the upside than to the downside. So that's where we are with that right now. All right, so that's where we stand. I'm going to go off the air for a little bit and then come back a little later. I'm going to work on some themes and getting the stream really set up for prime time, so to speak. I appreciate everybody coming on this inaugural day. It's really exciting to have a few people on there. I'm sure there's a lot of people who've started out their Twitch career and really not had anybody to watch them. So thanks, folks, for checking me out, and we will see you in the next one. Once again, looking like the market could go positive today. AIMT kind of disappointing, down 95 cents. ACB kind of disappointing, down 22 cents. Thanks for watching, and we'll see you in the next one. I should be back on in a few minutes.